Hello everyone, welcome to our 12th webinar of TradeClue series, and today we will be discussing the most widely used formats for trading, which is called as triangle breakout. Now thank you for showing a lot of interest and participating in this webinar. Now I would like you to recommend to go to our TradeClue YouTube channel where you can get all the videos, and now we also have a good series of 11 videos in the intraday trading setup. So those who are interested for intraday setups, you can go to TradeClue, you can subscribe our channel and also press the bell icon for the notifications. Now in this playlist, we have already covered a lot of concepts of intraday formats going from webinar 1, and today we are extending that from to webinar 12. Now last webinar which we did was consolidation breakout webinar. Now a continuation to that, we have this webinar as triangle breakout webinar. So let's get started with the triangle breakout webinar. Now everybody knows triangle breakout, they can be on smaller time frames like 15 minutes, 1 hour, maybe on daily, weekly time frames also. So we are discussing for intraday, so we'll focus on 5 or 15-minute time frames, and we'll try to see how to trade this triangle breakout. So let me quickly make the first format of triangle. Now there are different formats of triangle called as symmetric, ascending and descending triangles as well, but we are today focusing on only first symmetric form of triangle. So symmetric triangle means it keeps making all the highs and lows, they keep the range of the high and low, they basically starts shrinking, and it comes to a point where it is also called as apex. Now the price can go up or price can go down. So in this range that we have over here for our triangle, the price is observed to be moving in this range where price might hit a high, come back down all the way, again going up, again going down, and sort of consolidating towards the end. Now we are trying to understand how to trade this whenever the price opens the next day. So this is of a day prior. We already know this is under the triangle called a symmetric triangle format. Now when I go out and I want to focus on trading this, we clearly know where the top of the triangle is there, which can be more or less, normally it becomes your yesterday's high. So yesterday is high, so make a line around the yesterday's high zone. The second line, which is again more important, from the apex, or kind of we can say yesterday's close line, which is also very important to know where the price has closed yesterday. And the third line, which would be your day's low. So yesterday's day low will become your third line over here. So you have this format seen yesterday, plotted 3 points over here. The first point is your yesterday's high. So I'm putting this as YH, yesterday's high. Yesterday's close can be put as YC, yesterday's close. And then you have yesterday's low. Now you have 3 points, and now we need to decide how to trade whenever we see this kind of pattern emerging. Now I'm trying to trade the next day, not on the following day, the next day. On that day, we try to see whether it is forming a good triangle, symmetrical triangle format or not. Now this can go up or it can go down. So you can get a buy trade or you can get a sell trade. Now there are different formats by which we need to see. Now first thing over here, I'm looking for a buy trade. Now let's take different scenarios. The first scenario, let's say the price opens at yesterday's high, at or around yesterday's high zone. Then it comes back down all the way towards the yesterday's close zone, and then it takes a U-turn, and then it starts zooming higher. So this is the first scenario where we can say that the price emerges almost around yesterday's high, comes back and then starts going up. The second scenario where you can say the price opens around yesterday's close, where it opens somewhere here and then starts traveling to the up north to yesterday's high, then it comes back down, some rejections, and then it starts crawling higher or sustaining on the higher side, making a fresh new high. Same way, you have the third format. So here it is opening yesterday close, here it is opening yesterday's high, and the third format opens above yesterday's high. So when it opens above yesterday's high, it can come back down, and then it takes a U-turn, and then again it goes and captures the uptrend. So these are three buy cases where we are trying to look for and trade on the buy side. Now, same way, some people also trade on the sell side. So if it opens somewhere over here or around yesterday's high, and then it comes back down. So people also trade when it opens here and then starts coming down. So these are different formats to go out and look for the trading style. Now let's cover the sell side. So all this opening above yesterday's close to yesterday's high, different scenario A, B, C, and D. Now when we come across for selling, the same formats, this guy opened at yesterday's high, we will open at yesterday's low, then the price goes up, let's say towards yesterday's close, then takes a pause and then starts going down. And then finally we can go in for sell over here. So unless this yesterday low is not broken, unless the yesterday high is not taken out, we will never trade. Okay, so that is very, very important, because if this is not taken out, then it falls under the last scenario where the price starts going down. So this is the first format. The second would be straight going to yesterday's low, takes some time and then starts going down. So this is also very, very important. Sustains to yesterday's low, cracks it, and then starts going down. Sometimes it opens gap down. So huge gap down, starts climbing higher, comes to yesterday's close, and then starts going low. So yesterday's close is too far, doesn't even reach there. Yesterday's low comes about and takes a U-turn straight on the downside. And then you have sometimes looking for buy opportunity where it opens around yesterday's low. Instead of going down, it starts traveling up. So these are the different formats where we can say the scenarios of a triangle breakout. Now we need to also grade them, which one is good, which one is bad, to go out and trade. So let me put this as scenario A. So I'll put this as scenario A. Then we can put this as scenario B. Then we have this as scenario C, and we have the last one as scenario D. So the best one to trade over here, as I have noted, the ranking which I have given is in that format. So first one will be A, where the price comes back and then it starts zooming higher, collecting all the strength and then breaking high. Then comes the second one, already high, sustains and then starts zooming higher. Then I would rate this as the third one, where it opens huge gap up, so it comes down and then it takes a U-turn. And the last one, less likely to trade these kind of setups, but tendencies are there. When the triangles are bigger, you can go for some sell trade as well. So this is the kind of ranking which we have A, B, C, D to go for our symmetrical triangle breakout. Now let us take two quick examples to get more insight as to how this can be traded. So let's go to our tool. So we have our TradeClue tool where you get all the levels marked. So the most important query over here in aftermarket is triangle breakout. So once you go to aftermarket section, you go to triangle breakout, and then you can get the results of stocks under Nifty 50 for tomorrow, triangle breakout, or stocks coming from FNO which are classified for triangle breakout. So here we can see GAIL is a stock which has been shown in Nifty 50 for triangle breakout, right? So this is like for triangle breakout. So I am interested in GAIL. I can go and select that, press button, plus it adds to your watch list. So this way we can go out and understand whenever the stocks come under triangle breakout, and then we can look out how to go out and trade on those triangle formats. So this is very, very important. So let me bring you prior triangle breakout cases so that we have much more clarity by taking some examples. So let me take Reliance, and let's go back in time so that we'll also get the important levels of Reliance. So I go back to Reliance, let's say on 4th of June, where we had seen a very good symmetrical triangle format coming in place. Now, let me first understand. So these levels which you are seeing over here, the DR, MR, monthly and daily resistance were over here. and you have the daily support around this range. Now this is where you are standing a day prior, where you clearly know this is kind of triangle formation taking place. Okay, so this is where the triangle formation takes place. So this is one, and then you have more or less, you can extend a bit, the lower side of the triangle forming in this zone. So completely this was high, this was kind of low over here. So this is your yesterday's high, this is your yesterday's low. So let me also plot the horizontal line, yesterday's high, which is very, very important for us. Okay, now we know that the day will start, already it will face resistance in this zone, plus this is your yesterday's high if the stock goes higher. If the stock goes lower, this is your DS, daily support, plus we have a line over here, that is your yesterday's low. We need to plot both of them, yesterday's high, yesterday's low. Let's go back to our chart and let's see whether the case is A, B or C. So when we start the day out, we straight away see strong green candle emerging, but some kind of selling coming at the top because of near today high. So we can clearly say that this structure, what we are seeing over here, is similar to the B structure, going up and then couldn't go above yesterday's high, coming back down and then trying to sustain and go above yesterday's high. So let's see, goes out, comes back down below DR, MR, then sustains above, now trying to reach or capture yesterday's high for a clean upside. So this is the basic idea where you need to understand the price will come down or it can take a U-turn unless and until it doesn't take out yesterday's high. The upper side of the triangle, you cannot take the trade, because if you enter here anywhere, you would trigger your stop loss. And now many times people keep stop loss at yesterday's close. Sometimes it spikes down and then starts going up. But if you want to be very, very sure of this trade structure, it's better to wait to see whether it falls into A, B, C, and D and take collective action unless the yesterday's high is taken out. So let's take a quick example. One more. Tata Steel had formed a very good structure on 22nd June. So let me go back to 22nd May. Sorry. I go back to 22nd May. Okay. So we need the levels of 22nd May. So before we start with 22nd May, let's see a day prior. So this is your day prior on 15-minute chart. That's what we use for intraday study purpose. And we can clearly see this is 21st over here. The new highs, sorry, all the low highs were over this format. And then you had straight over here as well, where the low was made. We can put them together, which almost forms like a triangle. Okay, so this is like your apex being over here. This is your yesterday's high. So let me make a line over here. This is your yesterday's low. Make me make a line over here, and this is your yesterday's close. Now, more importantly, we know DS is over here. Max call, put OI, max pain levels are also over here. So this will also act like good support if the price comes down. So from here, if price comes to 280, it will act like support. Unless this is not breached, there is no collective action for short. Unless this is not breached or DR is also along with this point. If it is not breached, the daily resistance, then we cannot go out for buy. So now let's see how it opens out. So it opens straight away gap down. So it is opening around yesterday's high and gap down. So let's go back. It is not opening kind of over here at yesterday's low. So it is not opening here and coming down. So it is not opening around yesterday's close. It is opening at yesterday's low. So there are two ways, one at yesterday's low or below yesterday's low. So we can clearly see this guy went down and came up. So this guy went down and came up. So, but this was more or less opening at yesterday's low. Now, when it opens at yesterday's low, there are two actions. He starts going up, and once it crosses down, I will look for sell, or it is around this vicinity, doesn't go above yesterday close and then come back down. So more or less, it seems to be like the A structure and one of the most profitable structure. Let's see how it pans out. Here we can see going almost sideways, and then you have a spike on the downside. So after these candles, 15-minute clear red candle coming into play, you can clearly take a trade of sell over here, keeping this as the stop loss. Now the most important point over here was the max call OI was over here, DS was over here. So they all were there to act like resistance for him. They were acting like support if the price would have opened in this vicinity, but price exactly opened below this range. So downside is more open. So we can clearly see after this doesn't even come to above yesterday's low, and then the price keeps falling down. So that's the basic idea over here. It goes up, takes the support, a resistance zone is there, and then starts clinging on the downside. So kind of structure C, or kind of little bit on the upside, max OI levels are also there, and then it starts going down. So this is the base structure. As I said, the TradeClue helps you out to select the query from aftermarket. I will select my triangle breakout, the stock comes, then in the live market you can have the stock in your watch list, and then you have the options level, DS, DR, all these plotted to give you more prominent conviction to take in a trade. So that is very good. So you can now go out and subscribe your demo version of TradeClue. So you can just go to tradeclue.com. So once you go to tradeclue.com, and you can subscribe for TradeClue. And if you're not able to do new registration, you can WhatsApp on this number and we'll be happy to help you. So this was the insight of triangle breakout structures, and we'll keep bringing new webinars, but this is the most powerful tool. If you master this, either A, B, C, D comes into that structure, you can always have a game on. A good intraday trade for 15 minutes, and if you have a controlled action and risk management in place, making 10,000 with one lot or two lot is very, very easy. So thank you for watching the TradeClue webinar, and we'll keep bringing the webinars going forward as well. I would suggest you to go out and subscribe our YouTube channel so that you do not miss on the any webinars that we try to publish. Thank you very much for joining.